Good morning, everyone, and welcome to Friday morning. It's Stephen Whiteside here from the uptrend.com. In the pre-market this morning, stock index futures are currently down across the board. We also have Bitcoin lower while gold is up a few dollars in the pre-market on Friday morning. Now, we do have some economic numbers coming out at 8:30 this morning, a lot of personal income and spending numbers, and they could certainly help change the direction of the market. But I think the bias is definitely to the downside on Friday morning. Couple of stocks in the news this morning. Nova Norquist is down about 20% in the pre-market, so no change in trend there. While FedEx is popping, currently trading above $290. We'll have to see how that ends at the end of the day. Of course, we need to close above the 284.52 level at 4 p.m. this afternoon to actually generate a buy signal. If we got a buy signal in FedEx right now, I would not take the buy signal, but if I was short this stock, I would certainly want to cover my short position. Now, yesterday you had the chance to sell into strength. We opened near the high of the day, looking at the S&P 500, and closed at the low of the day. So if you sold something yesterday, you did better than you would have done at the close on Wednesday afternoon. And of course, if you bought any bear ETF or if you shorted stocks yesterday, you did that at the best price of the day. Now, looking at the week so far, looking at the VIX, and we're up over 74% on the week. So it looks like we're going to end the week on a weekly buy signal. For the Dow, we're certainly going to end the week on a weekly sell signal, but the S&P 500 has a little more work to do, so we may end the day on a sell signal there. And the NASDAQ has a lot more work to do before we actually generate a sell signal. Now, looking at the Russell 2000, we're down over 5% on the week, so that is certainly the risk-off trade with investors getting rid of the small micro-cap stocks more aggressively than they are the big-cap stocks. And there's the TSX. It looks like it's going to end the week on a sell signal. What didn't work this week? Well, pretty similar to what didn't work last week. We had the metals and mining ETF in the U.S. down nearly 8%, while the global base metals in Toronto were down over 6%. Those are the big losers so far. Now, the U.S. dollar index continues to move higher on the back of other currencies continuing to move lower. And so the U.S. dollar index is up 1.32%, while the Canadian dollar is only down 1.11% for the week, but certainly hitting a multi-year low for the Canadian dollar. Now, crude oil is down on the week, so no change in trend. We're still in the channel, while natural gas was higher, 3.81%, which is nothing for natural gas. So it's hardly visible on the chart, but we are back on a weekly buy signal as of Thursday's close. We'll have to confirm that by the end of the day. Of course, all these numbers are not written in stone. We make decisions based on what happens at 4 p.m. Friday afternoon. Now, gold is down $67.70 up until yesterday's close. It is up $8-10 in the pre-market this morning. And silver, which is already on a weekly sell signal, is down over 5%. That's not going to change much by the end of the day. Now, the bond market's freaking out right now. There's a big sell-off in bonds, which is shooting bond yields higher as the bond market gets ready for Trump. And Trump equals inflation, equals higher deficits. And certainly financial chaos. So the bond market is trying to get ahead of that, and the stock market seems to be trying to get ahead of it too at the moment. Now, Bitcoin had a big day yesterday. It is back on a sell signal as of Thursday's close. And of course, this is a short-term sell signal for people who trade the market. It is not a long-term sell signal just yet. We were able to run up to $106,250 and tag that. And then we reversed, and we're now breaking down below 100,000. So all the bull ETFs are back on a sell signal as of Thursday's close. And now we have buy signals in the bear ETFs. Of course, when you look at a market that's in a bull market, 80% of the time we're going to be going up, 20% of the time we're going to be pulling back. So anytime you get into a bear position or a short position in a bull market, you expect to not be in it as long as a bull trade. So anytime we take a position on the bear side of something in a bull market, we always want to be very sensitive to the fact that it's going to be a short trade. Now, there's a nice open gap up here on this particular ETF. That could certainly be a legitimate target to the upside as we go forward. Next up, let's take a look at the VIX, or the Fear Index, and it's nice to see the options traders in Chicago alerted us to this big possible down move in the market before it happened. And that's one of the reasons we like to watch the VIX. But, this type of volatility is what we expected to see in September and November. And it really didn't happen. Look at how high the VIX got back there. We were expecting a lot more volatility in September and October. It didn't happen. And I thought this would actually roll over into January with, the traditional Christmas rally. Everybody's usually bullish in December, but here we are. We're getting the volatility that we should have got in September or October, and we're getting it now, which is rather unusual and may not be a good sign for 2025. Let's finish off looking at some leveraged ETFs, and the leveraged ETFs I like to follow are listed on the website. If you go under stacks, there's Canadian 2X pairs and US 3X pairs. Those are the ones that I like to follow. They're all grouped together, so you've got the bull bear for the different areas of the market. Now, we have been in some bear ETFs for a while now, and if you look at the Canadian energy sector, we've been in a downtrend for a couple of weeks now, and of course, being out of the bull and in the bear has continued to move higher and hit $28 yesterday, which was rather nice. Then, of course, we've got gold stocks, and they've been selling off over the past week. So we've been long the bear ETF for the gold sector, and we hit 31.25 yesterday. It was the high of the day. So cha-ching, you got to lock in some profits up there, and hopefully we can continue to move higher from here. Now, if you want to cover the US market, of course, we're got the 3X ETFs, which we don't have in Canada. We just have the 2X ETFs. And of course, this is not a complete list. This is just what fits on the screen. The list continues to move down off the page. I trade these as a basket, so I'm not relying on one to be my big winner. I've got some coverage of the major indices, and then I've got some sectors, individual sectors. So if you want to focus on the world of commodities or even the futures contracts, you can do that. Or if you want semiconductors, small caps, whatever type of sectors you want to get into, you've got coverage for all of that with the leveraged ETFs. Now, when you're trading a basket of stocks or a basket of ETFs, and I like to trade 5 pairs, you're going to get one that is going to disappoint you. Now, unfortunately, I have no idea which one it's going to be, but you've got to expect of any basket of stocks or ETFs that one of them is going to disappoint the heck out of you. And lately, it's been the semiconductors, which has gone back and forth from buy signal to sell signal, buy signal to sell signal. Now, that is rather irritating, but it needs to be expected. You're going to be right about 60% of the time over the long term. Now, how that works is you're going to be wrong the shortest amount of time possible. So, one trading day, you're on the wrong side of the market, you get out and you reverse your position or just go to cash. That's the only way it works. You've got to get out of a losing position as quickly as possible, and then you stay in the winning position as long as possible and automatically take profits along the way. You don't want the market to quickly reverse on you. You want to already have some profits locked in. So if you're going to be right 60% of the time, that means in the next 20 trades, you're going to have 12 winning trades and 8 losing trades. And you've got to take the 8 losing trades to get to the 12 winning trades. Over the long term, there's no way to change that math. The market just doesn't want to go straight up and straight down. So you've got to account for the fact that humans are, a bit wonky and make bad decisions and overreact to certain news. And that is constant. That's always going to take place. So I can't tell you what the next 8 losing trades are going to be, but they're going to be there, and you want to be in them for the shortest amount of time possible. Now, as the major stock market indices start to roll over, there are areas of the market where we've already been in a bear trade. We've already looked at energy and gold. And in the US, the small cap ETF, the bull ETF's been on a sell signal for a little bit now. And the bear ETF, of course, has been on a buy signal for a couple of weeks now. So we're making money as the stock market falls. The next target for this particular ETF is up there at 1406. $14, of course, is going to be psychological resistance, and you can see that resistance worked back in October. And so I would be putting an order in at 13.99, 13.98, 13.97. Pick a number. You just want to be able to, take some money off the table up at that level. There will be never be an exact number. We could hit 14.06, and that would be nice, but assume that there's going to be some sellers up at that level. So you already got an order filled at 12.50, and so congratulations, you're reducing your position and selling into strength. Now, in the pre-market this morning, we are trading higher. We're trying to get to 14.06 or $14, and we're currently trading at 13.71. So there's certainly a possibility we could hit our next price target on Friday. And then, of course, you're going to put an order in to sell part of your remaining position up there at 15.63. Now, one of the things we often hear about the leveraged ETFs is they're just too volatile. You want to stay away from them. Well, that is what a mutual fund investor would say. But for the rest of the market, you got to remember we got to compare apples to apples, not apples to oranges. So, yeah, the overall market, if we look at the S&P 500, the average true range at the moment is 0.83. So under 1% movement per day is normal. And that's what a mutual fund investor is looking for. Something with little volatility, fairly stable, and moves up over time. Now, if we look at the 3X ETF for the S&P 500, the average true range is 2.63. So for a mutual fund investor, that is a massive expansion in volatility, and they're not used to that. They don't want that. They're not looking for that. But you, as an average stock trader or a stock investor, for Apple, it's currently 1.53%, which is rather low. Then if we look at Meta, it's 2.9%, so a bit higher. NVIDIA is 3.79%, Shopify 4.1%, and Tesla 5.37%. So if you're comparing apples to apples, the rest of the market, the stocks that people normally trade have a lot more volatility than the 3X ETF for the S&P 500. If you're a mutual fund investor, then of course you're going to feel very uncomfortable taking on this extra leverage. And, if you're a mutual fund investor, you're not watching this video, so you're probably not going to take the trade. But yeah, a lot of people complain that these leveraged ETFs are too volatile. And I say, compared to what? Okay, folks, that is all for this morning's presentation. Currently, Dow Futures currently down 230 points, but it is really the NASDAQ leading the market lower on Friday morning. Now, next week is a holiday shortened week. I will certainly be here on Monday. We will certainly update the website on Monday night, but that'll be it for the week until Friday, and we'll be back Friday night to update the website again with both daily, weekly, and of course, monthly charts. So have a great weekend, folks. Next time you'll hear my voice, if you're a member, is going to be on Sunday. We'll take a look at the weekly charts and see how things settled out on Friday. But we are expecting a bunch of weekly sell signals as of Friday's close. And then I'll be back again on Monday morning to take a look at what happened on Friday. You have a great day. Have a wonderful weekend, and we'll talk to you again soon.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.